Hello traders and welcome to another video review. Today is the April 1st, 2021. Let's take a look at the Forex calendar on Thursday. As you can see, we got some data from Japan. Quite important, Tenkan manufacturing index, non-manufacturing index, large manufacturers, and all of this manufacturing stuff. Some of the data had been better than expected, some were just in line with the expectations, so a bag of a mixed data, but overall it looks positive. So we will take a look at the Japanese yen for sure. As you can see, the overall PMI manufacturing better than expected, 52.7 points versus 52. The other interesting news, market final manufacturing PMI from China, 50.6 versus 51.3, worse than expected and worse than the previous reading. During the London session, we have the retail sales data from Germany, already published at 7 o'clock, worse than expected, 1.2% versus 2% expected, but still better than last reading of minus 6.5. CPI from the Switzerland, 0.3%, worse than expected number of 0.4%, but better than the last reading of 0.2%. Plenty of PMI manufacturing data across the Eurozone, including the Eurozone itself, between 8:30 and 9 o'clock. Then, of course, we got the PMI manufacturing data from the UK, and if this is the Eurozone PMI manufacturing data release, then it means that during the New York session we will have another ISM manufacturing, and indeed it is. 3 o'clock p.m. ISM manufacturing data from the US, and before that we got the unemployment claims and continuing claims data scheduled for release at 1:30. From Canada, we got LBC manufacturing PMI as well, scheduled for release 2:30, and building permits 1:30. The other news to be released are not that important: construction spending, natural gas storage, and Barkech Hughes US rig count, which is relative to the oil traders. So, plenty of data today. Let's take a look at the Japanese yen. American dollar, Japanese yen is trading just as expected. And as you can see, our scenario to the upside is absolutely spot on. As you can see, we have hit the 109.88 level already. We broke above it. Yesterday, the new high was made 110.98. So this is apparently, as you can see, this is the wave 4. It looks like this is the wave 4, so we have to change the number. Yeah, this is the wave 4, and we are now making the wave 5 to the upside. So this would be the last wave in this sequence. That would be the wave 5, and of course, the first target, logical target, based on the technical resistance on the US dollar to the Japanese yen, is 111.6771. So there is a blue arrow already. So far, looking good. We are starting to diverge from the momentum, because we have a higher high. This is not the higher high, so we have a negative divergence. So that's another clue that this is possibly the last wave to the upside, right? So this is the wave 1, the big wave 1, wave 2, wave 3, wave 4, and this is the wave 5. All we have to do now is wait for the wave 5 to be terminated. And then, of course, it will be a time for the corrective cycle to the downside. So this is how it looks like on the daily time frame. Let's take a look at the euro to the Japanese yen as well. What is going on here? And as you can see, the euro is still coping with the bearish pressure. We recently have there you go. We recently have a correction. It was apparently something like 1.84% correction from the highs of 130.64 to the lows of 128.83. Right now we are back back inside the channel, and we are threading the level of 130.10. Please remember, there is a new high made at this level, of course, 100 and 30.64. So this is right now our technical resistance. So far it looks good for the bulls. The uptrend is being continued. The last decline has been all but back up. The momentum is still positive. It's not that strong. It's only 60 points, but it looks like this market is going up towards the 130, and the next target is long-term target is 133.13. So that's the next target for euro to the Japanese yen, only if 130.64 is violated, right? So this is the next target for the euro to the Japanese yen. Okay, I think we should take a look, because there is a Canadian data coming in. We should take a look at the Canadian dollar. Let's take a look what do we have here. Let's zoom in, and we can see that bears are struggling with 1.2630. So it's clearly very important technical resistance level. We have marked it here. Blue arrow means it's important. So right now we have kind of a bearish engulfing pattern at the end of the bounce into the level of 54 points of on the RSI. Right now we are just below the RSI, 49 points. So if the bulls will not be able to break above 1.2630, that means we will make another lower low, and the downtrend, which is clear and visible here with the lower lows, will be continued lower towards 1.2366 and below this level. So right now the technical resistance were marked spot on. Again, bearish engulfing pattern. The bears are trying to push the US dollar lower. US dollar, Canadian dollar, and the last one will be US dollar to the US dollar to the Swiss franc. Let's take a look at this one. As you can see, we have completed the wave C already, and now we are extending the wave C up towards the next target level. Let me just take a look. Where is the next logical target? We can see that we can mark this level here, 9,466, 9,469. This is the next target for bulls, and the ABC pattern starts to look like 1, 2, 3, 4, and 5, which is very good for the bulls, because right now that would mean the whole move down here, as you can see, this trend from the 2019 had been all reversed, right? So we might be doing, apparently, the up move, the impulsive up move, not the ABC, but 1, 2, 3, 4, 5. So let me just change our view on the US dollar to the Swiss franc on the impulsive wave. So that would be the wave 1, that would be the wave 2, that would be 1, 2, 3, 4, and 5. So that would be wave 3. We're missing wave 4, and we're missing wave 5. So that would be our scenario, bullish impulsive scenario, targeting higher levels on the US dollar to the Swiss franc. So very, very good news for all of the bulls. Apparently, as you can see, another bearish divergence between this high and the potential high for the wave 3. It's clear that this recent rally has been made on the lower momentum, but anyway, it still looks bullish for me, and I think that we should have some kind of a correction in the wave 4. So that's the key level right now. We should have a correction in the wave 4, and then continue to move up in the wave 5, because it looks very, very bullish, and it looks very, very impulsive right now. So it's not ABC anymore, it's now impulsive bullish scenario to the upside. So I think that's everything for me for today. Thank you very much for watching this analysis, and I hope I see you guys tomorrow. Bye bye.